All right, and there's the bell. What's up, everybody? How's everybody doing on this fantastic Tuesday morning? Coming live at you from Florida early in the morning. Well, it's not that early. It's 9:30. The Tuesday before Thanksgiving. So let's see what we can do here. Bitcoin making a move lower after having a little bit of volatility yesterday. I'm not sure if this volatility was based from the news of the SEC going after Kraken or not, but they're doing the same thing the Kraken is basically they did to Coinbase. So they got a lot on their plate, the SEC does. All right. So anyways, I don't know if that's what caused this or not. That's the only news that I can find that came out yesterday that was substantial. Bitcoin is pushing higher, or has been pushing higher for the last couple of weeks. But you can see today it's having a pullback. You're still trading inside of yesterday's range. Nothing major there. I was looking for a short yesterday at hourly resistance, and I'll show you where that short was. It was right here. And unfortunately, I got wicked out. I got wicked out by this wick right there. I took it over here is the reason why. And once it moved down into here, I started to take a little bit of profits, move my stop down a little bit lower. And then unfortunately, that wicked me out before I caught the actual move lower. So there's that. But obviously, these things don't move in straight lines. So Bitcoin could potentially find support once again where it found support yesterday, which is right there at hourly res. You can see that was resistance. You retested it there, and then you broke out there. And then yesterday when we had that volatility, we retested it again. So it does look like that where she's headed for now. But it could find resistance or support right here. I mean, liquidating that wick could have it be good enough, but we'll see what it does. I don't know if it's going to do that or not. On the daily, you're losing momentum pretty rapidly, but you do have hidden bullish divergence. You got that low there, which is that close, and then this low, which is lower, but it's higher on price. So that's hidden bullish divergence. We'll see if it ends up playing out. It doesn't look like it's going to, but we'll see. I mean, it still looks like a strong accumulation formation. I think the majority of what Bitcoin's going to do has been priced in. We have hit over bought regions on the weekly time frame, and we discussed this pretty much in depth on Sunday's stream, but I figured I would do it today as well for anybody that was not able to attend that stream. Bitcoin does this, well, it has done it the past 2 cycles, where after you have your bear market phase and then you move into a rally, you get up and close to the halving, and then Bitcoin gets overbought on the weekly and then pulls back significantly. Last time we did this, obviously, was back in 2020, and the pandemic was the outlier. All right, so obviously, I'm not expecting a 72% correction like we got from this point. So, like, you can see where we hit oversold or overbought here, and then if you pull back that, it'll be a 72 or a 77% withdraw pullback right there, 72%. So, all I'm saying is, typically, you don't want to be a buyer up at these levels when you're overbought on something. Bitcoin's entire lifespan, since it's been a tradable asset, it has not made fresh all-time highs before the halving. Now, that does not mean that it can't do it in the future, or or is going to do it now. I'm just saying historical data shows us that Bitcoin usually doesn't go on its parabolic bull market phase until after the halving. After the halving, it goes on the rocket run. So over in here was your halving, and then Bitcoin took off. But let's go over to the Bellox real quick, as I think I have this stuff already pretty much laid out. Yeah, so there's that. But if we even go back in later cycles here, earlier cycles before the halving, we had an oversold or an overbought reading on the RSI, and then we had a drawdown of 37%. That's not exactly where I wanted you to go, but anyways, we had a drawdown of 37%. That's the wrong color right there. So 37% drawdown. I'm not saying that we're going to see that. I'm not saying that that's going to happen. I just want you to be aware that hitting overbought pre-halving has led to pullbacks. Now, that was only a 1-week pullback. You can see that 4 weeks later, it was right back up at that level until we had the halving in this region, and then price went on to make all-time highs. Same scenario happened here. We hit overbought, and then price pulled back. Then you had your halving somewhere in here, and then price went on to make fresh all-time highs. Well, here's our halving. All right, here's the halving. We got a 2024 yearly open is going to be right there. Excuse me, pardon the voice. It's going to be right there. I don't know that that's where it's going to open. I'm just talking about that's how close we are to a fresh yearly opening, and then there's when the halving is predicted to be. Right there on that date, the 15th of April, 2024. I cannot believe that it is so close. So close. But anyways, I could see something like this happen. We slowly pull back, drift down, find the open of the year, pity paddle around, and then go on to make, the bull market phase, if we're going to get a bull market phase. Remember, past market cycle or past market data does not suggest that's what's going to happen in the future, but it has a 100% hit rate up until now. Whenever Bitcoin has a halving, Bitcoin makes an all-time high. So that's what we're looking for. That's when I think people should start to be a buyer, is when we get a pullback. If we get a pullback, You got a small little trend line right in here. The reason I got this line down here is because I wouldn't doubt it at all if Bitcoin were to pull back all the way to this double bottom right here. You can see these two lows right there. And on this day, which I'll have to check it on the chart, you did not liquidate that low. So when you push down here, you did not take out that low. So that low is still down there. So that is why I can see Bitcoin retracing down, do something like that, and then open the year roughly in that region. Now that's a huge prediction, isn't it? Right. Yeah, it is. Let's see how big of a drawdown that would be if it were to do such a thing. Be at 34%. 34% pullback. Obviously, that's a prediction is impossible to make. But at the same time, I can definitely see something like that playing out. Yes, you did not liquidate that low. So, I mean, that's just an assumption. I don't care if it pulls back or where it pulls back to be honest with you, right? The only thing that I care about is the yearly opening range and the halving, as that's going to give us our directional bias for the majority of 2024. Now, if we were to get rate cuts, which the market is predicting we are going to get rate cuts in May now instead of June, so they bumped it up a month. If we get the rate cuts, that could be good for Bitcoin. And if we also get, excuse me, let me see what's going on over here. All right. If we also get, what was I talking about? Oh yeah, if we also get the Bitcoin ETF after the year, the fresh yearly open, I mean, all that's going to be fuel to the fire. I think a new ETF has been priced in, obviously, but Bitcoin had a nice run. I mean, we were telling you guys to buy when Bitcoin was oversold the first time. We got down into this region. This is when we hit the MVRVZ score. I was just talking and talking constantly on through all this entire down move here that we would not flip bullish back on Bitcoin until we get inside the buy zone on the MVRVZ score. Well, Lynn Alden is breaking out the MVRVZ score saying that Bitcoin is bullish. No, it's not now. I mean, now obviously it is now, but now isn't the time to be a buyer. See, that's what screws people up when you got big names like that coming out and being like, oh, this indicator suggests that Bitcoin is going to be bullish, blah, 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 blah. No, you should have bought it in this area. Even if you bought this freaking low right here and the FTX debacle happened, you would still be up very well on the year, right? You just would have had to sit through a little bit of pain that lasted for several months, right? Several months. But then again, we were buyers again at the yearly opening range, which is that yellow line. So, I mean, every major market turn has been called on this channel so far. So I don't expect me to, could I be completely wrong and we go up, make fresh all-time highs from here? Yeah, I could be. Well, what's the more likely scenario to play out in your opinion? I would love for you to tell me. In your opinion, what do you think is going to happen? So that's my opinion. But anyways, very small movement. This is your weekly range. We've only been open a few days, but very, very small move. Very small move. Like I said, we're still trading inside of yesterday's range. This was Sunday right here. So Sunday, Monday, Tuesday, not really a whole lot of liquidity in the markets right now because it's Thanksgiving week. But we did see a big move on the S&P 500 yesterday and among other things. But the short trade was at the hourly res yesterday, unfortunately. There is not a short trade to take today. If you want to get long, you could potentially get long when you take out yesterday's low, which would be this wick, I believe. Yes. But at the same time, just make sure you got your risk under control. All right? Because you're probably looking at a couple days of pullback, not just one. We did have a nice pullback, and then Bitcoin shot right back up. So we did have this nice little pullback, lasted for 4 days, and then boom, right back up there. This is an old weekly support zone. That's the hourly res. We no longer need it because price is traded away from it. But daily res, I mean, that would have been a good spot to look for short entries as well. I'll put that up there, and we'll go in the market and look intraday. You can see right in there. You could have waited for daily res to get broken down. If you would have taken it there, obviously, you probably would have been stopped out on that move. But that's 1900 hours. That's at 7 o'clock in the evening. We look for trades in the mornings. So London session pretty much gave you a perfect short entry. There you go. You've just taken out the low of day. So let's see if that holds. We'll keep an eye on it and see if it holds or not. I don't know if it will, obviously, and it doesn't look like it wants to. This is a pretty sharp move to the downside after some volatility. So it looks like there was a lot of selling and buying going on, but ultimately more selling than buying. Let's go look at that weekly support so you know exactly where it's coming from. It's just coming from these two closes right there. Weekly support, and it held again there. You got to move up. Then it tested it here. Then it broke down there. So that's an area that I expected resistance. As long as we're closing above monthly support, that would be a good thing. We are, pretty good into the month now, but the monthly range isn't very big. So look what happened last time. We had a nice expansion and a small monthly range. You got a pullback. So next month, you could see that pullback. I don't know if it'll go all the way to 24,750, but that would be the best place to be a buyer, in my opinion, before the halving, if we do get that retracement. And if you did get that retracement, by the way, it would look very bearish, and people would not. I think people would be, pretty damn bearish if we were to get something like this. Right? People would be excruciatingly bearish at that point. They would think that the world is ending and Bitcoin is not going to rally. But typically it has in the past, after the halving, rallied. So basically, on the long-term chart, back over here, we'll pull up Bitcoin. Oh no, the BLX, sorry. And go into the weekly. So basically, there's your cycle, 4-year cycle charts. But this is basically when I was telling people, this is when you want to start looking to be a buyer of Bitcoin. If you missed out on the yearly open entry for 2023, then you would just wait. And also, price really isn't an issue as far as I'm concerned. Let's narrow that down a little bit. So that's going to be your halving. Then wait for price to get in that little red circle. That's like your bullseye area. And then when it gets in there, then you can look to be a buyer. Or, watch how it reacts at the yearly open. But I've had this chart for years. It's been made up since the channel began. But we were right in calling the top in November. The Bitcoin halvings after the bull markets, all the highs have come in November. except for this one, but we don't count this one because it's pre-halving. There were no halvings yet. This was the first halving, so we count the halving cycles. So from halving to halving to halving to halving. And there you go. There's your halving cycle chart. 4-year cycle model, which everybody assumes is broken because they're saying this was the actual high. What? Now, how can that be the actual high when this is actually higher? Huh? How? How can it be? It's funny to me. Very, very funny. Also, if you notice, from having to top with 75 bars, from having to top 78 bars, from having to top 52 bars. So, I mean, I would say that the all-time high was definitely the bull market top. And we are going to be here in just a little bit, a brand new 4-year cycle. And then people will start talking about it again. Let's go look at the S&Ps, see what we're doing. Obviously, it's been a very bullish asset. I am watching it. It's got the cash open and it has set an intraday range. So this would be it. So if you are bearish or expecting a pullback, you don't want to see many bullish candles close inside of that. So how could we trade that? We could go up over here to the grid. And this is also going to be the daily expected range low on the futures, on the ES minis. You got 40, 45, 43 as the low end of the range, expected range, and then 45, 78 is the high end of today's expected move. Today's expected move was only $17. So not a big move expected to happen on the S&Ps. But we are bouncing here. So would I want to take a short being this close to the expected move to the downside? Nope. We do got news coming in 10 minutes as well. Doom, ba-doom, 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 boom. Oops. Way to go. Let's go get those newses. Where's the newses at? The newses is right here. Existing home sales. And it has been known to move the market. Come on. That horse garbage. All right, so existing home sales coming in 10 minutes. We'll see how this plays out. It's hard for me to get bearish, like I said, in this area. I don't have any options positions on right now except for Kraft Heinz. Let's go look at it. We got long, and then the day after we got long on that, there was an upgrade, which helped us out a lot on that trade. You can see now it is starting to break out. So we got long down in here. I think we're looking for a $36 target ultimately. $36. So we're going to hold that trade for a while. But it's just a bullish spread. Nice little bull flag here. All we need it to do now is break out. The Boeing trade that I was a part of, obviously I got out way too soon, right? But I got in it down here. I got out, I think, on this day right here because it was that resistance. That was daily res. That's where I take profits. And somebody asked me the other day, why do I close the position when it comes to options? Is because I'm using a very small account. And this account is, I deposited $5,000. We are currently up about 18% now. I've taken some losses, but we're still up on the year. We're still beating the S&P 500, and we will beat the S&P 500 by the close of the year. But anyways, the reason is because I can only buy one contract in some cases. But as you can see with this position, I have two. All right? Because they were cheap. They were very cheap. It was a cheap position. And I still have time. Right? So they were cheap. When we did it for like, I think we put this trade on for like $20 or something like that. So yeah, I mean, that's good. I haven't taken any trades today. It's so strange. Anyways, moving on. Yeah, so that trade worked out very good. The ones that I took did not, and that's when I basically took a break from the small account. So Bitcoin, it doesn't appear as if though it's going to hold lows. You do got daily support right there. Remember, if you are a buyer on Bitcoin, if you do want to buy it from up here, these are the areas that you look to be a buyer. Daily supports, always, always, always. Yeah, so there's that. Let's go look at the dollar. Dollar's pulling back hard, hard, and continuing with that pullback today. The reason for that is simple. You've got rate cuts being priced into the market right now. Rate cuts are not good for the dollar, typically, right? Typically. But we'll see how it plays out. Rate cuts are being priced in right now into the marketplace. NVIDIA has earnings today. Let's go see if we can't put on a position. All right, so yesterday you made fresh all-time highs, and they are expecting NVIDIA to beat. But my question would be, is it how much of those earnings are already priced in? Because yesterday it made fresh all-time highs. When last time we put, or last time we had earnings, we beat and you gapped up, but you closed down on the day. But it did the same thing, right? It basically made fresh all-time highs a day before, 2 days before we actually got the earnings announcement. So we will get the earnings announcement this evening. There's a couple ways you can play this with options. Let's go to NVIDIA and go in here. If you want to be a seller of premium because your IV is up at 100, I would not sell the premium unless it was up to like 600. You can see there's still quite a bit of premium on that for a small account. You would need $6,000 worth of buying power to sell that, or $5,000 worth of buying power to sell that. And you would be 2 standard deviations outside of the expected move. The expected move is up to 537, and remember that's with implied volatility priced in. So they're pricing in a potential for NVIDIA to move up to roughly 540. So selling calls up there. You've only got 3 days on the actual expiration, which is good. That will allow you to basically get in, and then once this IV gets crushed down to about 50%, that means no matter what, as long as you're not at $600 by those 3 days, you will make that full premium. There's a lot of premium on there. If you don't want to play it that way, if you want to be double-sided, you can buy options, buy a spread. You can buy a spread out of the money, like say buy the 495s, sell the 490s. That's a $5 wide spread. So let's see what that would look like. That would be 230, 230. Max profit 267, max loss 230. And 2 strikes out of the money here. You would buy that one and you would sell that one. So oh, wait a minute, something's wrong. Why would the max profit only be $70? Huh. I do believe that is wrong. Anyways, you could do something like that because it's a non-directional trade. You don't know which way it's going to go. You're just hoping it goes beyond that or beyond this, something like that. Or you can just take a bearish trade if you think that it's been priced in, or you can just take a bullish trade if you think it's been priced in. But I would definitely do a spread. Maybe not an in the money spread. I would probably do an out of the money spread. And if you got the money to lose, then just buy a put or a call. A little bit out of the money, not way out of the money. Like I wouldn't go up here and buy the 580s or the 600s or nothing like that. I mean, if you want to waste money, you could potentially do that. If you got like say $88 that you're okay to lose on a big gamble, that may pay off. But you're going to wake up, and if you're not at $600, that $87 is going to be drastically down. Drastically down. Because implied volatility is going to get crushed. So a couple ways you can play that using spreads. You can also be short spreads, but I tried to do that, and I just couldn't justify the risk to the reward. Like going way out of the money up to the $600 area. I was looking to sell that, and it was going to be like with a spread, the best that I could do was like $60 of profit, but I'd be risking $3,000. I'm not gonna risk $3,000 to try to just make $60. It's just not feasible. I mean, there are trades that I take where I am risking a whole lot more than I'm, gonna make, but those trades are higher probable. That is a very high probable trade, just to sell a way out of the money call or a way out of the money put, because the likelihood of it going back down to 392 is very, very unlikely. And we can go actually get the percentage on that. So the delta, so yeah, there's like a 1% chance of it getting back down to there. But there's not much premium down there, is there? No. There's more premium on the call side because it's skewed. The call side is skewed. See how the skew goes up? 105.90, 106, 106.12, 106.60, 107. There's your implied volatility goes up like that, then that means we got a high skew. And there's more calls being bought right now than puts, probably. Let's go see. NVDA. I'll pull this up over here. And we can pull up today's option statistics. Oh, yeah. Big volume going down. Ooh, but it looks like there's more call selling and put buying going on. There is more call selling than buying. Remember, you're always a seller at the bid. Always a seller at the bid. So definitely more selling going on of calls. Now, that doesn't necessarily mean that they're putting on fresh positions. the people that already had calls could be selling them as well. But you don't really want to see this. This is not bullish. That looks more bearish. But that could change as the day goes by. And then people selling puts versus people buying puts. So it does look like, it definitely does look like there are, as of right now, there are more people bearish Nvidia than bullish. That's interesting. Very interesting. That may change throughout the day, though. We'll keep an eye on it. So what are we doing? Nothing. Literally nothing. Trading in a range. Disgusting. Trading in a range. So we might be able to take a long down here at 45.43. I don't know why it's moved itself up, but I had it at 45.43. Oh man, I don't want to have to redo that. Looks like I'm going to have to redo that. Give me 1 second. The close was 45.61 yesterday. 45.61 minus 17.44. Ah. There we go. So that's the lower edge of the expected range for the day. So we could potentially take a long there. But I don't like getting long on an asset that is literally just moved up. So Apple's down on the day. Amazon's down on the day. Amazon gapped down and is moving lower. That's a pretty big move. Goog is up on the day. Meta down, but a doji. Microsoft. I mean, what a freaking move, man. Everybody thought that this was over. This was going to be an evening star rotation. And nope. Boom. That happened down here too. Everybody, well, me, I was thinking that this could potentially be an evening star formation. We'd see a pullback, after such a massive move. But no. The pullbacks seem to be happening in like spans of days, but they're like not actual pullbacks. When I say pullback, I'm expecting something to pull back, like pull back. The move was so fast, so crazy that you completely left your EMA behind, setting in the dust. Let's go look at Tesla. I was looking to buy Tesla yesterday, and I didn't freaking do it. Damn it. But, I mean, you can clearly see what's going on here, right? Impulse, retracement, impulse, retracement, impulse is what we were looking to do. Don't buy Tesla now. You're at resistance, please. That's not the way to do it. Yesterday, I said during the stream on Sunday that if we retested this price, 232, then we could buy a long call spread. I just didn't do it because it's Thanksgiving, right? I'm not really trading that much. But man, I wish I would have done it. It's too late now. We have to wait for another pullback. But I mean, if this rally is real, which obviously it's real, it's happened on everything else, then why isn't Tesla making a fresh yearly high? Most of your others have made fresh yearly highs. Tesla is still down pretty big from its yearly high. So that's why we were looking for longs down here. Should have just held it, but it had reached almost max profitability because it was a spread. When you do a spread, you can only make the spread. So it's a defined risk trade. Spreads are really good to slow the assets calls and puts down, because Tesla's calls and puts move very rapidly. It is a high beta stock. But I don't want you to do it now, like I said, because you're at daily res. But you would go out like 38 days, and the way we would have done it is we would have just simply bought an in the money and a $5 wide. We would have sold the out of the money 245. And that gives you a max profitability of 245, but a max loss of 257. I generally don't like to put on spreads, $5 wide spreads for more than $1.50, but there's with tech stocks, especially these, your Nvidias, your Teslas, your Amazons, your Microsofts, they're skewed, right? Because they're just expensive. Very expensive. Even though it's not expensive in price, these are pretty decently low strikes, 240, 245. They're still $1,600. They move fast, very fast. But I was bullish Tesla. Still bullish Tesla. I'm going to be looking for another bullish entry around 233.16 if we get a pullback. Maybe not today or tomorrow, for instance, but someday. Maybe next week we pull back. And then bow, we get one of those. Yeah. And I did take a trade on XPing also. Here's everything that I'm watching. I was looking to be a seller of oil today. Did it break down? No, it didn't. Okay, so can't be a seller of oil because it didn't break down. You got support right here, intraday support. I was watching this candle for a close below. If I would have got it, then I would have looked for a retest and bought a put. But maybe it trades sideways today. It's pretty much doing that. And these are all the things that I have on watch. BA, obviously that trade has left the building. NOC, which is Northrop Grumman, still potential for longs here, in my opinion. Lockheed Martin, still potential for longs. TLT and Shy, yeah, should have kept those on. Need a pullback so I can get long TLT, and I'm going to get long and hold it for a long time. I'm going to look out like 90, 100 days. Tesla, RTX. RTX broke down, so I'm not looking along this right now. Upstart. I think it's a long, but we'll see. I was actually had a short bias on it when we broke down, but we'll see how it plays out here. It does look like it's maybe bear flagging out, but XPEV is what I got into 2 days ago on this move lower. And then yesterday I closed that trade out. Here's the trade we're currently in now. We're waiting for it to go up. Amgen lower, Charter lower, Comcast higher if it can maintain this. If we lose the 21, then I'll wait for support to get tested. Then I'll look to enter a put position on this Coca-Cola long knee. This one's tough. Definitely has a short bias because of the market structure, but it's holding the 21, so we'll have to see if it's able to hold that or not. Nike was long. Pepsi long, but it looks like it's trying to break down. Philip Morris was a long, and SPX. So those are the things that I'm looking at. Good morning, future ledges. What's up, Ray? Yo, what's up, T-Tiers? Good morning, Tom. 2019 miners closed red before the halving. Yeah, I mean, it's possible. Good afternoon, Michelle. One candle to 80K, just buy. Yeah, that'd be nice. Man says, I'd say we visit 30K again. Yeah, that's feasible. It's feasible for sure. Gold is gone. Oh yeah, that was one also. Yeah, that was one also. I was looking for longs, but I was looking for longs on GDX. Ended up having to stop out of that trade because it dropped all the way down to there. But then ultimately it's popped back up. So if I'd have just held it, but I have a risk tolerance level, and once that risk tolerance level gets hit, I close the position out. That's how I'm able to maintain my small losers. Occasionally one will get away from me, but not very often. I closed it down. But GDX is not reacting as good as gold is. So maybe we could look at something else like GLD, for instance. Yeah, GLD would have been a better trade than GDX. But it did the same thing there. It broke down, put in a little bear trap, and then ripped. Three existing homes. Yeah, it's already happened. That's what's caused gold to go probably. But it didn't do anything for the S&P. We'll go intraday again. Absolutely nothing. Down 3.79 mil. That's a pretty big drop. That should be bearish, you would think. I guess the market doesn't care, Michelle. Good morning, Johan. That looks like a bearish harami. I don't know what a bearish harami is. Tom, you know me, bro. There's only three kinds of candles. Three kinds of candles. You got trending candles, outside candles, inside candles. That's it. Those reversal patterns are best looked for like in the direction of the trend and not for like a reversal of the trend. So like when I talk when I talk about an evening star formation, it's just when you have a gap up and then the next day you gap down. Like it puts just one candle up in the air like this. So that would have been an evening star formation if this candle was lower, right? One candle sticking out from the top and then a gap down and go. That's an evening star. But that was also in the midst of a downtrend, right? That's when you want to look right there's. It's not even a perfect evening star because a perfect evening star you need the open to be down here. But it's just a candlestick pattern. But as far as candles go, there is only three kinds. Trending, inside, and outside. There is no other kind. They don't make them no other way. Either you're trending, you're inside, or you're an outside. And right now, mostly everything is inside. Bitcoin is no longer inside because it took out yesterday's low. So let's go see where he's at. Oof. Taking out support. Coming down here to the next support. 21's down here. Like I said, I don't know if I'd be a buyer up here just based on the fact that I know that we're overbought on the weekly. That's why I was looking for shorts. Unfortunately, I just missed it. Just missed it. I didn't actually miss it. I actually mismanaged it is the better word. Mismanaged it. I mean, the S&Ps are absolutely garbage. They are freaking straight sideways. We're going to look to potentially sell this thing. Let's sell this thing. Let's see. Do I got a level I can sell it off of? Boopity boop. Boopity boop boop. Boopity boop. No, I don't. Look at that. Look at that garbage, man. Look at yesterday's candle in relationship to its size to today's. Oh my gosh. I guess man could watch the open. We don't look at EMA's intraday. I don't have any levels for this at all. This is like right in the middle of nothing, nowheresville. Is it the midpoint of that candle? Yeah. So it's like trying to bounce from the midpoint of this candle, but the sellers are also holding it down at the open. So yeah, it's just been so damn bullish. A pullback is definitely what I was looking for. But I don't know if we're going to get any kind of continuation out of it. So going back to this platform, we would need to tag this and hold. Or we can sell the open, which would be right there. So we haven't tagged the open on the ES minis, which is 45, 50, 25. 45, 50, 25. All right, going down to that lower expected move. Dropped right through those lows. But we can try it. We're going to get out of it quick, though, if it don't work to our liking. So we'll get out of it quick if it don't start to move away. Burn it. Let's see. Go on. You can push. Do it. Do it. Do it. No, the other way. Go. Ticks are, let's see. What are ticks? Oh, ticks are negative on the day. So I should probably. Where is the market? Let's go use the heat map. No, we want index watch and we want S&P 100. So you got 36 advancing, 65 declining. So overall, that's a pretty bearish signal. And since ticks are negative, I should probably bounce. I'm watching the other chart, seeing if that 2-minute candle can push up beyond the midpoint. But like I said, everything's pointing to be negative. So we should probably just go ahead and bounce. Have boosted our profits up a little bit on the day, not much. Yeah, ticks are negative. And here is your advanced decline line. It's negative. It's not heavily bearish. I would like have a complete and total straight up bearish bias if this number down here was like around 85. 62 and 39 isn't really that bad. It just depends on what your tech stocks do, because we know that the majority of this market is only being held up via tech, and tech is not doing so good today. Yeah, everything's down except for Google and Tesla. So should have shorted it. I don't like shorting it though that close to the bottom edge of the expected move. But now that we've broken through the bottom edge of the expected move, we could potentially look to catch a push up. If we could push up into here, then maybe we could take a short. Switch this to the 2-minute real quick. Let me get my other chart back up over there. As long as we have negative ticks, we look for the asset to go lower. So yeah. Give me a test of some kind of resistance. This isn't really resistance or support. It's just the expected move. What the S&P 500 was expected to do. So basically what I do here is if the day is supposed to move $17, you can see right here that we've gotten that move. It was supposed to move up or down $17. So literally we've hit that. We're setting right at 1761. We've hit that and we are moving lower. So yeah, should have shorted it. At least we didn't take a loss on that. We actually made a little bit of money, but not much. There she goes. There she goes. All right. We need a pullback. Now at this point, I would want to see a pullback to the VWAP or something, but I'm pretty sure let me go back over to the flex grid here. So this is the VWAP, the purple line, but you can see with the ESD bands, the blue, all three of the blue lines there, that's the ESD bands. It's similar to a Bollinger Band. It's like a Bollinger Band breakdown. So this line right there, the midpoint, is roughly where you would want to look for a retest and then take a sell on it if you are looking for any downside continuation. So it just took it a bit for the home sales data to kick in. But there it goes. What do we got on the DXY? Why does it look like that? Oh, because I'm on the daily. DXY, not really. Yeah, so it's just chopping around at the lows. So we can't do anything with the SPY right now. We have to give it a bit. We'll go over here. Nope. Yeah, it's just chopping. Chopping at the lows. And this daily range on the dollar is not a very big range either. So we're seeing a small ranges. Bitcoin's actually down 2.6%. That's not a small range. Bitcoin's been trading on its own merit, so I wouldn't get long on it based on the fact that the dollar is bearish. Because the dollar's been trading down and Bitcoin really hasn't been trading with the dollar. And it hasn't been trading with risk either. Bitcoin is literally trading on its own supply and demand dynamics, which is awesome. But it made it a little bit easier of a trade when one could anticipate its movement directionally biased based off of some correlation. But there just isn't anything right now Bitcoin is correlated to. Yeah, that was a nice, big, strong move on gold today. Why didn't you say something earlier, Tom? We could have bought calls on GLD. It's right at resistance now, so don't buy calls on GLD right now. You can see it tagged resistance to perfection and is pulling back. Well, almost perfection. Getting front runned. Oil, please. Yeah, oil is a trade I am definitely looking at. For some reason, everybody was expecting it to be bullish, and then we just got this massive push lower. And then we got a nice rally back to the upside, taking out resistance, closing above resistance, doing what I like to call a bull trap, and then rolling right back over. Mm, mm, mm. I got long on ConocoPhillips the other day for that. Oh no, I was short ConocoPhillips the other day. We caught this move right there. That big boy. Me and one other person inside the Discord was watching that move lower, and it was a good one. Then we came in, made another low. Over here's daily support, basically, is what's holding. But ultimately looking for it to roll back over. Look at that. Tell me it don't work. It does. You just got to find the right one. They all don't work, obviously. Like this one didn't hold. It held for what, 3 days? Support, 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 up, then down. So it did hold for a couple days. This one didn't hold nothing. So what do you recommend on oil? You think it's going to go higher? Then you should have bought the low of day, which would have been a midpoint test of this daily range. Let's get rid of everything except the midpoint. See that? It just went right down to the midpoint of this candle's range. And that is so far where it has found support. So, I mean, even if you did get long there, you haven't really gotten that expansion. It's just trading sideways. And it's still like, well, you got it filled at 76. You'd be up a buck. That's actually a pretty good trade if you're trading oil futures. Because yeah, it moves a dollar. The micros move a dollar every cent. So that'd have been $100 trade on oil. Yeah, that support just didn't hold. I should have bought hourly support. Because I was watching this candle right here before we went live. I was like, maybe if it holds, we could look for a retest to get long. And it did test it right there. She got resistance right above you, so it could stay in this range and chop all day long. SPY's down 0.46%. It does not look like it's going to give us our entry. You're trading well under the expected range lows. And I wouldn't suggest getting long either under here, expecting it to go back up, just because it has went up so much, so fast, right? So a pullback was expected. It was almost a guarantee at some point. Well, it is a guarantee at some point. When is the hard part? But SPY didn't make fresh yearly highs. NASDAQ did. SPX didn't. SPX 500 didn't. NASDAQ, you did. You made fresh yearly highs. NASDAQ is moving. Moving pretty good. It's almost moved the same range as it did yesterday. It's moved 154 points. You're down 154 points today. It looks good. What looks bearish? Oh, bearish around me. Oil, please. Good morning. I sold everything at 37,600. When to buy back? Is it wise to ladder into the downside? No. Let it pull back deeper. I don't know if it's going to pull all the way down here to Q2's low, obviously. But I would be a buyer, like, say, anywhere in this area. It just wait till the first of the year, Johan. Just wait till January 1. See how it acts, right? You could be a buyer on Jan 1. How I was a buyer at Jan 1 this year. I wouldn't expect the same exact thing to happen, obviously. I mean, that was just flawless, a flawless play, flawless victory, and that should be there. Just simply bought the open. Boom. So we're just kind of waiting to see if, where is Bitcoin when we get there. And right here is going to be that yearly open. So yeah, where is Bitcoin when it gets to here? That's gonna be the thing. So yeah, do that. Yeah, we got Fed minutes today, but there's no speech. It's not a Fed meeting. It's just minutes. Yes, the minutes could move the market if a dot plot matrix is published and it looks like they're going to hike again, which that is not priced in. Remember, it is not priced in. So if you do get a rate hike, that would probably send the market down. I have never in my life ever seen a 100% reading since I've been looking at this tool, right? Since I've been watching this tool, I don't think I've ever seen a 100% because it's a probability thing. So the markets usually they use probabilities. So I've seen like 98 or 99 point, 4, 99.3s, 99.7s, but 100%. There's 100% chance that there is not going to be a hike in December. That is crazy. And then if you go out to the next FOMC, which will be at the end of January, Jan 31, 100% chance. This tool must be broken because there's never anything is ever 100%. You know what I mean? In the markets, never. You got two 100% for Dec and Jan. March, that's when a percent drops off, but it's still right at the same. So there's still a pause. 70% chance that there's a pause in March. Now watch May. Boom. There is a 48% chance that we cut. Current target rate is 525, 550. So 500 to 525 is a cut. It's a 25 basis point rate cut. And the market is expecting that to happen in May, whereas 2 weeks ago, 3 weeks ago, it was expecting it in June. So it's already moved its predictions up a month that the Fed is going to have to cut. And typically, like I said, cuts, well, let's not say cuts, but let's say, how can we do this? Let's go to the SPX real quick and let's look at 2019. Because 2019 was a year where the Fed was hiking right into here. They started to do their hikes. And let's add Bitcoin here. So yeah, the markets, the Fed started to hike, and then it was trading sideways again, and then it came out and said, we're hiking again, boom, boom, boom. The market did that. And then I can remember them coming out and walking it back. And then they started cutting rates again. And look how Bitcoin reacted to the rate cut. Nice little move to the upside. Then we traded lower. Then the halving happened. No, the halving didn't happen until over in here. Yeah, it was after that. This is when the halving happened. So yeah, I mean, typically Bitcoin would like rate cuts. See? Rate cuts. Should be good for Bitcoin, but it's just one of those things that it's impossible to know what's going to happen. But we're pretty aware of what's going on, and I'm assuming we're going to see a pullback, and I wouldn't be surprised if we did pull back all the way to Q2's low. Liquidate Q2's low and then rock and roll. But that just seems far-fetched. So let's do it like this. We'll put it like right in here. We'll leave it on there and see how close I am when we get there. Where is the price? And then that's pretty much where I'd look to start adding into a small position, or start adding, because if you continue lower, remember that chart that I posted the other day in the Bitcoin room, Johan, trends there's an old saying, as January goes, so does the rest of the year, or something like that. Well, that is true for Bitcoin. Here, I think I actually saved it. Let me pull up. I can't find it. Oh no, those were... No. Maybe it's saved in pictures. No, I don't know where I saved it, but I saved it. It was an old tweet from years ago. Right, here we go. So, like, these trend lines aren't for price. It's just, it goes from open to open. From yearly open to 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 yearly open. So that's how, like, literally, that's how we knew to be bearish when everybody was calling this a Wyckoff accumulation. We knew to be bearish because Bitcoin usually, trends, or at least stays above its yearly open. So everybody thinks that, it was Elon Musk's speech, or not speech, but interview that he did with Kathy Woods and that other guy that owned Twitter at the time. It didn't bounce because of that. It bounced because it traded into its yearly opening range. That's why it bounced. And then yearly open literally bounced off. But that was an old yearly open. So you had already another yearly open prior to that. But still, you can see what I'm talking about. Now, this was a little bit difficult because these are weekly candles, and you can see that Bitcoin traded under its yearly open down here for like 5 to 6 weeks. But we don't want to see bearish trending candles week after week after week. Otherwise, we're going to be bearish. As long as Bitcoin is trading under its yearly open, you look to short pops. Whenever it's trading above its yearly open, you look to buy supports. So, like, if I completed this chart now, it would look like this. All right, so yearly open, Up, up, down, down. Nope. Nope. And then yes. And then we sold it. Boom. See ya. And then go to yearly open, which is here. So you would take your little trend line tool here. Jan 1. Jan 1. You see that? And then this one was green. Jan 1. And then here is going to be the next yearly open. Take your little tool here, Jan 1. Jan 1, but this would be green. You see what I'm saying? Like, it does that. And nobody has ever talked about that before on Twitter, ever. Except me. Now a lot of people talk about it. I find that so funny and fascinating. These people using my methods. Yeah. That's the way it works, my friends. And almost forever, like almost forever, it's been doing that. There was 1 year in Bitcoin that was very difficult. We'll find it. Bear with me. I changed you back to black. What the hell is going on? There was 1 year that was very different. And it was this year. All right. So obviously that's Jan 5, but it's a weekly. So it was in that week. Or it could have been somewhere in this week. I don't know. But we'll just use that. So this is the one time in Bitcoin's history where it didn't follow that model. Right? Until, September, October. Then it broke out. And then here's another Jan. Traded under for a little while. Resistance. There's your breakout. Get long, baby. Get long, get long. This is what you want to see. A reaction like that off of that level. Sayonara. But like I said, this wasn't during halving though. Right? This was just a year of sideways bearishness and choppiness, but it didn't happen. It wasn't a halving year. But ultimately the trend was, up. It just took all year for it to do it. Right? Because if I go from yearly open to yearly open, is it up? Yes, it's up. How much is it up by? Because that's all that investors care about. It was up by 71%. A year to date, Bitcoin had risen to 71%, but it did it late in the year. It did it fourth quarter. Right? So this was the 1 year in Bitcoin's history that it was very difficult to trade based off the yearly open. Because it wasn't acting like resistance or support. Literally, price was just wicked right through it. $261, man, wouldn't that be nice? Holding Bitcoin at $261. Say millionaires. Yeah, wait for the yearly open, my bro. You're gonna be here with me, hopefully. By then, we will figure it out. I promise. Let's get off this ugly ass chart. I need to fix that. Damn. It's pumping from daily support. It didn't test it. Huge pump. What happened? Why didn't you buy that? I told you to buy it. I'm just kidding. Just kidding. Is the SPY bumping now? Or is it just Bitcoin? Where are you at, SPX? No, SPX is still... SPX, it could be bottoming out, though. Let's go get us a long trade on SPX. Oh, damn it. It's already moved up too far. And this will be the last trade we take. Ah. See if we get some downside continuation. This is definitely where we would want it to happen. Let me pull up my tanker swim. Yeah, we're retesting the 21 exponential midpoint of the Bollinger Band. It's not a Bollinger Band. It's called an ESD band. If you have Thinkorswim and you want that tool, just look up, go to edit studies and look up ESD band. If you just type in ESD, it'll pull it up. It's a pretty cool indicator. It helps with intraday stuff, if you will. Let me go to Market Watch, make sure we're still 40-60. We're still 40-60 bearish. Tesla is still up. Nvidia is down, but it's set a low of day. So like whenever if you trade futures, you just want to put your stop 2 points above where you're in. So we're in at 45.43 spot 50. So you would put it at 45.45 spot 50. 44.50 is right at the high of this candle right here. So 45.50 would be all the way up there. Because when we take the trade, we're looking for 5 points. Right? 5 points. So we need 38.50. Which would be right there. That would be our 5 points. So you risk 2 to make 5. Risk 2 to make 5. But yeah, Bitcoin pumping, definitely pumping, makes me a little bit nervous. Is this thing lagging? No, it's not. It's down on the 5 minute, but on the 2 minute, it's not. Because Bitcoin could be leading. Bitcoin sometimes does lead risk. I don't put a physical stop up there, and that has hurt me before. Because like if some bit of news comes out or something and you get a 10-point spike, you're going to get crushed. So it is best to put a stop up there. But I've been stopped out too many times for price to just then turn around and go my way anyways, right? Which is never fun. And that's happened to every single person who has ever tried to day trade in their life. They get stopped out and then price ends up going in their direction. But the problem is they forget about all the times that it didn't work. So I'll just set that at market and get ready to hit it. All right, 44.50. So we just took out that wick high. Let's see what the NASDAQ is doing. NASDAQ isn't really pumping. Ooh, that would be my stop loss right there. $45.50 would have been my stop loss. So what we want to see is we want to see it move away back down, or we close the trade out for a loss. If it doesn't start to move away and back down. But it could move up 2 points from this high right here. So 44.50, it could move all the way up to 46.50 and then drop. But that's a lot of heat. And it's not dropping. Drop, damn you. Drop, I say. That was a terrible entry on my part. I should have waited for that and then jumped in short. That would have been a better risk to reward scenario. All right, so we're back up to 46. We just hit 46. All right, so we close them out real quick. Just give him a second. Just give him a minute. I'm in at 43.50, not 44.50. Yeah, I don't like that. Nasdaq it looks better to the downside than the S&P does. Dollar's pulling back a little bit. That's probably what's going on there. Dollar really hasn't moved anywhere. So we're probably gonna have to chalk this up as a loss and be done for the day. I can't tell if that's a 5-minute close above that ESD band or not. It closed right on it. Excuse me. It closed right on it, so it's a difficult read. Give me what I want, please. Market. Do as I say. I kill you. All right. Come on down. I'm looking at the daily here. Chart alert. What did that say? I don't know what that yellow dotted line is. I'm just going to give it another minute or so, and then I'm going to bail if it doesn't drop down. Ticks are still negative. We're negative 39 on the day. Ticks are pretty much in a straight line negative. And Market Watch is still, well, it's actually getting better. You got 57 declining stocks versus 44 advancing. So this is probably Apple or something catching a bid. No, Apple's still on lows. ABT, AIG, Boeing, BIIB, BK, BLK, CL, DHR. Nah, I don't really. I mean, Goog isn't even moving. Goog's moved away from the high of day. I don't know what MDT is, but it is in the 100, so it does hold a heavy weighting, but not nearly as much as like Microsoft and Apple. Where is Microsoft? Right there. So Microsoft is trading kind of at the lows, the daily lows. Netflix is trading. Netflix has turned green on the day. So Netflix set a low of day and then turned green. And Tesla is green on the day. But nothing else is. So we should get a favorable move here. Yeah, Microsoft is setting near the lows of day. Netflix has just turned green, though, which can hurt us. Qualcomm is down big. Walmart's down. Meta's down and at the lows of day. I'm just looking here. Intel is down 2.5% and at the lows of day. Goog is the only one that's up. Google and Goog are both up, but not at their highs. They're back down towards the open. And I don't see any other. Amazon is down and near the lows. AMD down and near the lows. Yeah, we should get a favorable move here. Apple is down and making fresh lows. I don't understand why this isn't rolling over. Because those are literally the only stocks holding this thing up. We should get a favorable move here. Hella bounce off the weekly, says Run Mountains. Yeah, it was. It was a nice pump for sure. Nice pump for sure. Charter's down huge, almost 5%. That one was on the watch list, but I just didn't take it. Like I said, it being Thanksgiving week and all, I actually expected sideways markets. But then Monday comes and then big, massive, explosive, bullish move. Crazy stuff, man. The chart now looks favorable for another downside push. So we'll hold it for a little bit longer. The NASDAQ, though, is not really. It did push down, but NASDAQ's kind of all the losses that it just had are getting given back up, which you can see that happening right here. But this is a 5-minute engulfing or an outside 5-minute candle to the downside, but intraday, that doesn't really matter. Doesn't really matter at all, because ultimately we did close above that midpoint of the ESD band. So, yeah, I don't like this price action at all. Plus, it's 11 o'clock. Usually this is outside my wheelhouse as far as time to look for trades. I look for trades around the open up into 30 minutes after the open. So that would have put us short in here somewhere. That's what we should have done. We shouldn't be looking for fresh expansions lower. Especially not here. I mean, that was just a terrible, terrible entry on my part. Terrible entry. The dollar is moving down. There's your dollar. It's pushing down. Now, this is what I was watching. This right in here. One close above is okay because, like I said, traps exist on every time frame. You get traps like this. Breakout traders would take that long, so we want them to feel the suffering now. So what we want to see is we want to see downside continuation and closes lower. We did get a lower close there, so that's good, and a close back under the ESD band. And remember, we're only looking for 5 points. 5 S&P points. If we can get it, I mean, but let's go ahead and put that in. So we would want to buy to close at a limit order. This better not screw me like it did the other day. 45, 38, 50. And that'd be 5 S&P points. Lock that price in. Review. Send. You did it again, you piece of shit. Oh my God, I hate you. It's supposed to put it in down here. Oh my God, what a miserable piece of garbage broker. Maybe I should have did a stop limit. It don't matter. We're out of the trade. Not because I wanted to get out there. I wanted to get out at 38.50. I even locked the price in, and it still filled me there. Whatever. Whatever. I'm just kidding. It doesn't really faze me at all. It's trading. It happens. We're already good. Let me make sure I didn't miss any questions here, and we'll wrap this baby up. If anybody's got any questions or want me to look at something, if you think you have a trade, please put it in the chat now. Is there a fractal from last cycle you looked at that showed a wedging up just like this, then breakout upside? That's after the halving, right? Yes. Run DMC 555. With all of the past data that I have looked at, we usually do not get pumps until after the halving. Like, Bitcoin doesn't have a big bullish run until after the halving. So this bullish move right here, what we're seeing, I guess you could call it a fractal, but I showed you at the beginning of the stream, we've hit weekly overbought signals in two of the previous two cycles. Both those cycles we hit overbought, and we did see pullbacks of up to 72%. But if you were to pull back just to those lows, it's Q2, it's the Q2 2023 low. If you were to pull back to that, that would only be a 30 or a, what was it? 34% pullback. Let's see. I'm looking for Bitcoin, and I'm on Bitcoin. So this is the low I'm talking about. That's Q2 2023's low. If we were to pull back to there, that would be a 33% pullback, which is in line with what we've seen in not last cycle, but the cycle previous to last cycle. Last cycle was an outlier because we had the pandemic. All right. So unless we're going to go into a recession in the next, before April, I don't see Bitcoin dropping 70% from where it is. I can see it dropping as low as this. And if it did, I would be a buyer there. I would definitely be a buyer there. US 2-year down almost 1%. Yeah. 0.92%. I have lagged data, though. You might have actual time data. Oh, wait, it doesn't say that it's lagged. No, this isn't lagged data. That's funny because the 30-year is lagged. No, it's not. What the hell? I thought these were all lagged. Oh, it's the bonds are lagged. Yeah, the bonds are lagged by 15 minutes. That's all right. Yeah, so I want to be long the 2-year just because Stanley Druckenmiller is. So that would be ZT1 exclamation point. But I want to buy calls, right? I want to buy calls on it. So, and it's too late. Shit. It's too late because I should have done it at the open today. I should have bought calls at the open today. I definitely want to be long this product. I just got to wait for pullbacks, and I got one today. I just wasn't paying attention to it until Michelle just said something. But on Thinkorswim and on tastytrade, you find that simply by going /ZT. And then that's your 2-year treasury note. That's what Stanley Druckenmiller is long. He is long this. Now these things move. Yeah, it takes $1,267 just to buy one contract. And I think each tick is $7.80. But you can see that it trades sideways a lot, and these ticks right here it's not a very liquid product. Right? It is, it's just it don't move very much. So what we would do is we would look to see if it has options. So /ZT, hit enter, and then go to table, and it does. So what we'd want to do is we'd want to come out here and we'd want to buy like the 102 or the 101s. But it's still a big trade. It's $900 to buy one of these. So it will move. If it has a big move to the upside or a big move to the downside, it will move. So I would have to do it via spread. And I don't know if you can do spreads. Well, there you go. Max profit 312, max loss 203. So not quite a 2-to-1 risk to reward, but I definitely want to be long this. Or you can get long the SHY, SHY, which is the 1 to 3 year Treasury bond ETF. Same thing, but do it via options because this thing barely moves, right? From where it is right here to yearly highs is literally $1.50 or $1.40. That's not a very big move, but options leverages that, right? It leverages that. So I would buy SHY long-term treasury option, call options. TLT's the 20-year. But if they are going to cut rates, then this is going to go higher. If they're not going to cut rates, then this is going to roll over. In fact, if they're going to hike again, this will roll over. But I've already missed it. Like, I tweeted when it was up here, yes, pull back so I can buy you. And I did buy it when it got here. I bought it. And then I took profits here. I closed the trade. So if I'd have bought two, I would have been able to close one, hold the other one, and I'd be up more. But I wasn't able to, unfortunately. So I am now looking for a pullback in order to get long again on the TLT, but I definitely want to be long the 2-year as well. Whether it's a call option on the futures or just get long the outright futures. But it's going to be hard to manage risk because we could still see some volatile pullbacks. If we do get a volatile pullback, I will be looking to buy it. For sure. Absolutely. Because, like I said, if they're going to start cutting rates, there is so much profit potential inside of this. So much. Now, I'm not saying that it's going to go all the way back up to 178.65, but damn, right? Because this is what they broke when they started hiking so fast. They broke the bonds. Look at that. That's like a straight waterfall dump. And even with that, it's only down 49%, which 49% sucks because 401ks are usually in this stuff, right? Your 401ks are usually in the TLTs and the longer term 30 years, the ZB1. That's usually where your money's allocated if you have a very risk-free portfolio. So, like I said the other day, my stepfather's down like 40 grand on his 401k right now because his money managers got him mostly in this. So, I want to buy it low. I did buy it low. Unfortunately, I didn't hold on to it. I treated it as a swing trade or like a 2-day trade instead of a long-term hold. But if we do get a pullback in this, say down to 87.54, or even if we fill this gap, 85.09, I will be a buyer. But I will have a stop loss, of course. And if that will change if the Fed starts to hike rates again. If they are extremely hawkish still, and they're still talking about hiking interest rates, then we don't really want to be a buyer of this just yet. But if they are done, if the rate hiking cycle is over, we do want to be in this. You do want exposure to this. Whether you buy the outright shares or if you buy options, you want exposure to this. And you could just keep rolling those options out further in date. So you could buy one or two or whatever your portfolio would allow. You want the 2-year. You want this mainly, right? Probably not where it's at. Probably not at 102. Probably lower, like at 100 if we could get it back down there. I doubt we can, but we'll see what happens. But on the TLT, you can buy them 87 days out and they're cheap. They're $3, $3.60. You could buy 2 of those, would be like almost buying one of the other ones. Buying one of the 2-year. But you want near-term exposure on the 2-year. But I also want 20-year exposure as well. Because the TLT got wrecked. And that could be a yearly, that could make your whole year, that one trade. And before expiration, wherever you are in the money over here, you would just go out another, 40, 50, 60 days and just roll to that expiration. Yeah. And you just keep rolling them. That's the way. That is the way. So, not today, obviously, because it's in resistance. We need a pullback. I'd say watch the 20 or the 50. Nope, obviously this is a bearish posture, but a pullback to the 21 EMA, the 50 as well. This daily support is really close to the 50. I'd probably go ahead and buy a call and take it from there and try to manage that trade much, much better. But the problem is when you're showing your actual portfolio, the actual returns on portfolio, holding down trades like that will definitely cause the P&L to bounce back and forth. You know what I'm saying? And I always have to cut my risk. If I'm not going to hold a call option on the TLT if it gets under $58 as a loss. I have to cut it. That's the rules. That's a 1% loss on total account equity. So, but we do want exposure for sure. And then what did Brian say? MPW long. You can trade that stock every single day if you like, Brian. I don't like it, dude. I don't like it. And I don't like it. And you know the reasons why I don't like it. It is nasty. It's ugly. It's been killed. I mean, you're trading something that used to be $24 and it's $4 now. That doesn't scream value. Any stock that has lost $5, people that own this in their portfolios, hedge fund managers, investment bankers, they have to cut this. They have to lose it. See ya, sayonara. If you can't hold $5, it's got to go. That's why $5, you've seen it be very volatile around here, because this is hedge funds and investment bankers dropping this out of their portfolios. In other words, selling their exposure to this asset if they owned it. So now what could potentially happen is a waterfall moving all the way down into the ones or the threes. There's no reason to buy this, in my opinion. But you are scalping it. So scalp away. I mean, I have no problem with you scalping the hell out of it. You got daily support right there at 459. So you know how to trade, but I'm not buying it. And yeah, it had a nice move yesterday, but that's only a 30-cent move. So, I mean, the most that you would have made if you had a 1-to-1 would have been $30 on the trade on one call option. But you add daily support. The only way I'd be interested in potentially buying this again is if it can sustain bullish momentum above $5, as that would indicate that hedge funds and investment bankers are picking it back up, rotating it back into their portfolios. But as long as it's under $5, they shed it. It's a law. Because anything under $5 is considered a penny stock. Okay? It's a law. They have to. They are not allowed to hold penny stocks. Regardless of what you may think is going to happen with this. I mean, the only way that it finds support and looks like a premium thing to invest in is if it gets back above that $5 mark. As long as it's under that $5 mark, you can see here pre-market, it got bumped up there. Pre-market, and algo said sell. And look, boom, right? So they just flipped all their bots and algos to sell $5. I want out at $5. So you get dot, tick up, dot, big tick, sell, gap, down. So yeah, it might bounce here based on daily support, but as long as it's under $5, the direction for this stock is down. So that's what happened to Space. I'll show you. And now it's a penny stock. That's the yearly open. I can't get it perfect, but I mean, I could go in there and edit it and make it perfect, but we'll just do a 5 right there. So here it comes, right? Bounces to $5, and it bounced like almost perfectly there. This, people buying it at $5, expecting hedge funds to pick this thing up here to basically protect their position, and then it lost it. And then here comes the volatility of the sell side. Right? And they stop selling, wait for a bounce. They get their bounce, and they start selling more. Sell. And then boom, another drop. So it literally took how many months to unwind this position? November is when they started their unwind. June. By June, they were out of it. And look what happened to it. So say what you will about space, Virgin Galactic, or whatever. This thing is now a penny stock and nobody owns it. Nobody. Every single pump is going to get sold into, unless, I mean, obviously there are still insiders and stuff like that that own it. They're allowed to own it, but I'm talking about specifically money managers. If you manage people's money, you're not legally allowed to own anything under $5. So that's why you get all this volatility around $5 and then see you later. And that's what's going to happen in PW as well. It's just a matter of time. It's just a matter of time. Technical analysis, patterns, and nothing is going to save this. This is eventually going to probably roll over and be trading down in the 290s, bounce around from 150 to 290. I doubt it goes into actual under $1, but if it does, then that means the company's in real trouble. And I have to file bankruptcy. All right. That's just, I know this is one of your favorite things to trade because you post in my DMs every single day about MPW. It's just, in my opinion, I just don't know where or why you have such an affinity for this stock when because I've already mentioned the whole $5 rule. If it's under $5, then investment funds and bankers aren't allowed to own it. Therefore, it's just company insiders, your CEOs, your CFOs, the big people in the company, they still own a shitload of shares. But it's just a matter of time before they start dumping as well. When that happens, oh man, this thing will roll over like crazy. Now, is it shortable? No, because it can only go to zero. You're at $4. So the most you can make is 100% on a short ever, at no matter what price it is, right? The most you can make is 100%. But at the same time, there's just not enough meat on the bone. Now let's check its shorts. Let's see if it's heavily shorted. Because if it's heavily shorted, then that could be a good reason to look for long trades. It is heavily shorted. It has a 22% short float. See, I'm not the only one that knows that rule. That does have a big short float. So yeah, you could get lucky and get a huge short squeeze. It is wedging up. There's your wedging formation, longer term wedge formation. It did break out, but now it's coming back in. Like I said, as long as it stays under that $5 mark, it has the potential for a short squeeze, and that is all. That is it. But it is a heavily shorted stock, and that's the reason why it's so heavily shorted. So let's pull up the option chain. It's got a dividend, so I don't want to buy puts or sell calls, not with this around. After this goes away, then I'd probably come out here somewhere and buy a $5 put, and that $5 put will probably pay long term. But the most it can pay is 100%. Well, no, I guess it could pay more than that. Let's see. If we moved all the way down to $2. That means I could potentially make a couple hundred, but that's options. Options are levered up. Look at this. That is volume. Look at the open interest on puts. Look at the volume right here at $5. Where's the $5 call volume? Open interest. That's not the volume. There's the volume. You see the difference there? Now it's at support, so I can't do anything with it right now. But if it does bounce, I will buy a $5 put on it. Because it's just a matter of time before its thing rolls over. Long at 462. Well, you're at 461 now, so you need it to bounce. And you're probably not going to get that bounce. If you're going to get it, you would have got it. I mean, you did get it, but look, it's not going anywhere. But who's to say it doesn't do this, right? Yesterday, it was a good trade for you. I don't know if you're going to have the same results today. Just be careful. Nat gas long, maybe. Nat gas was a long time ago. I'm just messing with you. I'll go look at it for you though. But I'm kind of serious, but also just joking with you. It was a long time ago. I don't know about now. Let's go look at the nat gas futures. Yeah, I don't know. I think it's coming off because oil is, to be honest with you. But who was it? And I can't remember what they were in. No, not this. Stay away from that. Maybe it was LNG. No. QG1, SCO, UCO, UNG. Yeah, I had a guy. I don't know if they're still here or not. They got in at like 620. So like they got in over here. And they had an insane target. If I can remember, I think it was like way up here. And I was like, first off, I wouldn't be looking for anything over $8. Why? Because that's the range it's in. And when something's in a range, you can't expect it to break out. If you are expecting it to break out, then you're doing this wrong, right? So would I buy it now that it's back at the bottom end of the range? Probably not, because something is forcing it down. So now, if they didn't take profits, I hope they did up when it was up here at the top end of the range. I think the top of that candle might have been their target. Anyways, their target was like, it was really high. I got this line up here for some reason. So maybe that's what their target was. I don't know. I can't remember. But anyways, yeah, I don't think I would mess with it because it dropped quick. But if you do want to buy it, I don't know. I don't know. Are you talking about the futures? Or are you talking about something like this? Right? Like this is the natural gas fund. So this has options. You can either buy the underlying. It's very cheap. Or you can buy options on it. You can buy call options on it just because it's at the bottom of the range, but I would not have a very high target. Maybe 631 just for a gap fill. daily res would put you at 672. And that would be my ultimate long target on it. But it's coming into the winter time, and natural gas is seasonal and all that. But if it's a mild winter and there's not much demand for it, then you know what I mean? And plus there's supply. There's probably a lot of supply out there right now, and that's why it's just not able to break out of this range to the upside. But it is cheap. I mean, you bounced right off of daily support. Not that one. That one. Like, you traded right down to it overnight, opened, pushed into it, and bounced. But this thing just hardly moves, right? It just barely moves. So I would trade the options. That way it's levered for you automatically. It's automatically levered up. I would trade the options. I would buy the at the money or even maybe the $5 strike call. But if you close one daily candle under 594, I would bail. I would bail out of that position like my life depended on it. Because since it has been in a range for so long, if it breaks out to the downside, you could see prices get as low as $4, $4.50. You know what I mean? So be very careful with it. Because that is the bottom edge. I mean, the very bottom support right there. It did look good for a while. It was doing good. But then it rolled over like oil and see ya. It went right back down where it came from. So I would probably say, yeah, you can buy it now because it's at the bottom of the range. But if you lose 594, bail. UNG, let's check out the prices on the options. Let's go out 59 days. Yeah, they're cheap. I don't think I'd buy the $5 call. I would buy the $6 because that's at the money. But I mean, look, this is the expected move on this thing, and it's got 72% implied volatility, and this is your measured move. So anywhere from 550 to 750 in 59 days. It's got $1 move. $1 expected move. $1 up or $1 down. It doesn't move very much. But it's liquid. I like to look at stuff like that. And then over here on the bearish side as well. And just do a little bit of comparison. All right, so it does look like traders are expecting it to break down. But it also looks to me like more traders are expecting it to go back up. So here, I'll go ahead and put this position on right now. If I can get a fill. I mean, tight spread. Look at that. 1 penny wide. We'll take that just for a bounce because it's at the bottom of the range, right? See if we can get a bounce up to daily res up there, 670, and then we'll close it off. But it's already struggling to hold today's gains. Like as soon as I bought it, it dropped. Right? Yeah. This thing looks bad. If it closes a daily under that, I will exit that position. I will close that bitch out. Because the problem is if it does, then the next day you could have a gap down, like big gap down, free fall, because everybody's got their stops where? Right there. So price gets under that, that could cause a cascade. Boom, 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 boom. And like I said, with the measured move of the size of the range, 450 easily it could get to. Easily. But let's see if it bounces, because it's at, the bottom end of the range. And it is it is still range bound. It's once it becomes unrange bound, that's when we no longer want it. Unless something amazing happens and it comes unrange bound up here. It did there for a little bit. That's a perfect example of an evening star reversal formation. Perfect example. You close the day here, then the very next day you gap up, open higher, but you close lower. The next day you gap down, close down. Evening star reversal. Whoop, whoop. That would have been a beautiful short trade. And then up here, it just struggled at resistance and dropped. It made a lower high. And now you're in a descending channel. You've actually broken out of the descending channel to the downside. And the overall structure, you have a smaller descending channel. But yeah, it looks like it's going to break down. It looks like it's going to break down. We'll see if it can bounce from here, but once it takes out 587, it's gone. If it closes the daily under 587, it's gone. At that point, I might buy a $6 put and close the $6 call. Because I think it could get to 450 at that point. It's a supply issue. That's why a lot of people, like a lot of smarter people, are assuming that we are going to see a recession, because oil should be strong right now, based on the fact that we have 2 wars in 2 different countries, right? Oil should be strong. But since it's not, that means there's no demand on the retail side. If there's no demand for the product, the prices go down. That's also what's helped inflation, is the price of oil going down. So there could be the same issue with this. There's just too much supply, not enough demand. But yeah, you just saw me take a long position on it. But if we drop and we close the daily under this, I will immediately close that position for a small loss and look to open a short position for that cascade move to the downside. Can we look at T-Doc? Looks like it wants to bounce. Dash for dinner. Have a fantastic dinner, Michelle. We'll look at this and then we'll wrap it up. Thank you for being here, as always. I'll look at this for Ellison. Back. T-Doc. T-Doc. Let's go look at it. Oh, come on, don't do this. There we go. Another healthcare product. See, I don't see the little dinosaur, so I think there's more data going to show up over here. There we go. Still no dinosaur, so probably more data. What happened? I get a spike on my internet. Yeah. All right. Well, anyway. Oh, no. That's what. It was a massive gap down. Yeah, this thing looks bad. It looks bad. Still no dinosaur, though. It's just straight down. It was once trading at $3.09. It is now trading at $16. I mean, if you want to buy it because it's cheap, yeah, okay, but it's beat earnings the last 3 quarters and it's still sold off. If you're day trading it, I would not want to see it close under 1692 as that is daily support. If you close under 1692, the next level obviously would be gap fill 1606. If it makes a wider or bigger range down here, then I would look to buy the lower edge of the range. But same principle with nat gas. I mean, obviously people are selling this stock because it's just down, hugely down. Huge gap down. What is wrong with you, internet? So it's been down here before. There we go. There's the dinosaurs. That's the end of the data. It's been down here before and it had a nice, healthy rally from 2016 all the way up to 2021. And then from 2021 to now, it lost 94% of its gains. So something very bad happened up here. Very bad. This was a nasty gap down. And you did not fill that gap either. And you probably won't. When something is weak, it tends to stay weak. Especially if it's been weak for years. Will you get bullish spikes in a downtrending stock? Of course you will. Here was one. Here was one. Right? Here was one. There was one. There was one. Lasted for 4 days, but still, it was a bullish rip all the way up to $30. From 22 to $30. So this thing moves pretty quick. But ever since then, it's just been a slow grind down. I would not want to be a buyer on this at all. That gap is filled. Daily res has held. Now it's heading lower. That's going to be your daily res. And if it were somehow amazingly able to hold support here today and then tomorrow, tomorrow break out, this would be as high as I would expect it to go. Or here. That would be like the highest I would expect it to go. And then I would look for shorts. Is this thing optionable? T-Doc. It is. And not only is it optionable, it has weeklies. Wow. That's only 38 days out. It's got a lot of options. Not a lot of people trading it though. As far as with options. Not a lot of open interest. Hardly zero volume. Almost. I mean, you got some here, some there, but yeah, I don't know. I don't like it long. But it is at a daily support. So watch 1691. You want to see it bounce from here. Otherwise, like I said, you're probably going down to fill the gap at 1606 if you lose this daily support. It's just a matter of time before you get down to 1605. All right. So, yeah, if it holds this, then I would, trade it up to there, potentially there. But that's like, because you got a resistance here and a one there. So that would be asking a whole lot out of this stock for it to bounce up to there. But watch daily support, close below, leave it alone because it's coming down to here. I wouldn't buy a put on it because that's not even a dollar move. Right? It's no point buying a put on it unless you think it's going down to like 14. That way you can make a couple bucks on your trade. But yeah, I don't like it. I don't like it. I would watch it at the close. See where it is at the close. If you wick under it and then close like around 330, if you're back above 1701, 345, if it looks like it's getting ready to, the market's getting ready to close and it's trading well up off that white line, then maybe you could go in there and buy a call. Buy an in the money $16 call. Or $16.50 if you can get that. Yeah, you can. That's the way I would trade it. I would be looking at that as a support hold and then see you, but I don't think that's going to happen. This thing is looking rough. Looking rough. I mean, this is a perfect selling opportunity. Perfect selling opportunity. Not now, but it was yesterday. Yesterday, I would have shorted this like nobody's business if I would have known it was at resistance. That would have been an easy trade to make. You're testing your 50 on the RSI on the daily time frame and failing. So, yeah, I'd say it's probably heading lower. All right, with that, thank you guys so much for being here. As always, I do so much value your time, and some of these streams can get a little bit lengthy. I understand that, but I try to help everybody out as well as find trades and all that other stuff. So thank you guys for being here, and I will see you, well, not on Thursday, it'll be Thanksgiving. Maybe we'll do a stream Friday, but we'll see what it looks like on Friday or not. All right, you guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart. And as always, happy trading, everybody. And for all of you Americans out there, if I don't see you, happy Thanksgiving.